Hey YouTube, this is the trade recap for April the 9th. This is our third trade of the week that we took. This trade we ended up getting stopped out. Right there, got stopped out of it. So I'll run you guys through what my thought process was and why we got stopped out. So first and foremost, my bullish today was bullish. My prediction today was bullish. I had a bullish bias. That played out, but it didn't play out when I wanted it to, which kind of sucked. But that's all right. That's completely fine. First thing I want to go into is that we had no fair value gaps or anything that were looking to get filled over there. We didn't have that many liquidity sweeps, but what we did have that I liked was we had a liquidity sweep off that high right there. That liquidity sweep allowed us to change trend into an equilibrium, a 15-minute equilibrium specifically. So I'll draw that up to there. So pre-market going into market open equilibrium that we have. And then if we scroll down to the 5-minute time frame, let's see. 5-minute time frame, we have another equilibrium. Another equilibrium on 5-minute time frame that got hit, and we closed above the equilibrium. Not above the high, but above the equilibrium. All right, so to me, and also let's keep in mind what we had yesterday. Yesterday we had a gap that did not. Yesterday's trade was we were trading a gap that did not get filled. What do we come in here? We come in and we fill this gap during pre-market. We move up during market open, and almost by 10 o'clock New York time, that's 30 minutes after market opens, we start seeing retracements to the downside. We see that with a filament of a 5-minute equilibrium. We see that with a filament of a 15-minute equilibrium. Two confirmation confluences that we're going to move up. Even a third confirmation confluence based on the filament of price that did not get filled overnight, right? And what caused the little retrace was obviously this sweep of liquidity right here off a 15-minute high. So we come in and then we fill in the 15-minute, we fill in the 5-minute, and we close above it. To me, this was good entry right here. I wasn't too worried about us not closing above this high right here, only because that was a 5-minute high. I wasn't too worried about closing below that. And also, I'd like to point out that my stop loss was set down here, below the gap, kind of like the start of the gap towards like below the gap. I was mainly closing it, my stop loss right by these lows right here. That's because in here we had a 5-minute fair value gap that could get filled. So we come in and we don't immediately break structure of it. We start retracing down more, and we have a break of structure here. We have a break of structure here. We had the filament of the fair value gap and we start moving out of it, but then we had the inversion of the fair value gap. So let's think about it. Let's think about it if we're trading the market in this point and we didn't enter. One, we did not close above the 15-minute high. We had the liquidity sweep. We had the equilibrium filament on 5-minute. We had the equilibrium filament on 15-minute. Good confirmations that we can move up. But say we didn't enter on that. Say we're moving down, right? We have break of structure. We have break of structure, and then we have inverse fair value gap. So two break of structures confirming that we're going to move further down. Liquidity sweep. I forgot to mention that. Liquidity sweep to the downside. Two break of structures. So liquidity sweep is our opportunity to change trend. Break of structures is confirmation that price wants to change trend, and we're going to move down off two break of structures. And then we have an inverse fair value gap confirming price will change trend. Well, I'll put will in quotations because we're not 100% sure, right? We cannot be fully 100% sure off this, right? So then we come in and we get filaments of gaps, but what do we see? We see big moves up out of it. So this is where I got stopped out. I'm gonna keep this video short and simple. On my end, this was probably just bad psychology because I traded market open the first 30 minutes of market open, and I'd look to probably trade maybe a good hour into market open, just letting market settle, because this week, for all we know, this could have just been early morning market manipulation to the upside. All right, so that's the trade that I took today. Unfortunately, we got stopped out. We still are green on the week. This is the first red day of the week. We're still green on the week though. We're still up, and we'll see what tomorrow's trade brings. Peace, love, thank you guys always.